Hello and welcome to Prime Business. Coming up, a senior finance lecturer foresees very difficult negotiations for the country following the IMF's demand for a proposal on debt restructuring.
Looking at the dynamics in the various countries, I am foreseeing a very difficult negotiation for the Ghana mission.
Also, 2021 Auditor General's report expresses worry about the general decline in returns of the Ghana Petroleum Fund's investment as it directs government to take steps to pay shortfalls in petroleum revenue to the Petroleum Holding Fund. Plus, oil prices fall below $90, the first time since February 2022, as fuel prices may go down next week if the cedi stabilizes against the US dollar. We'll hear from an oil production specialist.
The second reason that could be possible is this policy rate hikes. Because what this policy rate hikes do is just to, in a way, stampede demand, just to be able to cap inflationary pressures. But it is early days yet to see whether these policy rates are what is accountable for this.
We have this and more coming up in the next 30 minutes with me, Beverly Broohm. Do stay with us. Thanks for choosing us. Now to the details. The new IMF mission chief for Ghana, Stefan Rode, has wrapped up a two-day informal engagement with government officials. The visit was to afford Mr. Rode an opportunity to touch base with some of the officials that will be working with him during the September-ending engagement in preparation of a program with Ghana. The mission chief will be leading the IMF team to negotiate with Ghana's economic program by the end of this month. Mr. Rode ended the engagement by meeting the governor of the Bank of Ghana, Dr. Ernest Addison. Some of the engagement centered on Ghana's rising debt stock and what should be done to settle the situation. Mr. Rode also met some civil society groups and Finance Minister Ken Ofori-Atta on Tuesday. But reacting to this, senior finance lecturer at the University of Cape Coast, Seiram Kawa, says he foresees very difficult negotiations for the country following the fund's demand for a proposal. He spoke on the marketplace.
This debt structuring that will take place, those who have given us these loans in terms of buying our bonds are residing in various jurisdictions. Some of the bonds are raised in foreign countries. Once they are raised in foreign countries, what it means is that the debt is regulated by the laws of these countries. So Ghana would have to fall on those laws and then go into proper negotiations so that these debts can be restructured or put in a particular way so that Ghana can have more liquidity in the system. And I'm sure that is a condition the IMF is bringing on board. And looking at the dynamics in the various countries, I am foreseeing a very difficult negotiation for the Ghana mission, in the sense that I have invested money, I'm expecting this return on the money over a period of time. And then this is the case, you are coming to me to renegotiate the terms of that particular agreement. It's not mandatory that the people would agree to it. So it comes with some cost involved when you want to restructure your debt. And remember, we have been downgraded by Fitch and other international rating agencies. These are some of the reasons why we fell into that particular downgrade. And so government going into that will be very difficult, but it's a necessity to release the country of some difficulties we find raising money for the domestic activities that we are doing, because these debts take a lot of interest, and then we try to service a lot of finance cost when we go in for this amount of money.
The 2021 Auditor General's report has expressed worry about the general decline in the returns of the Ghana Petroleum Fund's investment from about $17.5 million in 2020 to a little above $14.1 million in 2021. It is therefore recommending an improvement in operational efficiency. Here's a Business Desk report.
The report also noted that a total amount of $2.57 million was still outstanding from surface rentals as of 31st December 2021. 8 companies, including Swiss African Oil Company, are indebted to the state. The non-payment of these amounts, the report said, has reduced funds available in the Petroleum Fund. The Auditor General therefore recommended an increased effort to recover these outstanding debts from the defaulting companies to make funds available for the Petroleum Fund. On gas production, surface rentals due from 11 out of the 17 operating companies increased from the 2020 indebtedness of $2.11 million to $2.60 million as of 31st December 2021. Meanwhile, the Auditor General's report has directed the government to take steps to pay the shortfalls in petroleum revenue to the Petroleum Holding Fund and also take a decision on the recoverability or otherwise on the outstanding balance due from the Ghana Gas Company Limited.
Oil prices have fallen below $90 per barrel on the world market following fears of global economic recession. This could cause a reduction in fuel prices at the pumps on September 16, 2020 if the trend continues. Brent crude at our last checks are selling at $88 a barrel, falling below the $90 a barrel for the first time since February 8, 2022. Meanwhile, oil production specialist Dr. Yusuf Sulemana tells Joy Business the failure by OPEC to increase supply of crude oil will affect the pricing of the commodity, forecasting a price of about $90 per barrel for the rest of the year.
And the difference is that China, as much as they are the second consumers, they don't produce. US is the first consumer, the largest consumer, but they produce, so they almost net whatever they do. US produces and consumes at the same time. So in terms of petroleum products, China globally is a lead importer of petroleum products. So when there's any dent in demand in such a player, the direct impact on the market is dire. I mean, it fits straight to the market. So yes, China consumption is dwindling, and the reason why China consumption dwindling is just because they have some kind of lockdowns coming up. And I think China is just, they are just practicing what we call abundance of caution. They are practicing what we call zero tolerance to COVID. So wherever they have even few cases, they will lock down completely. So yes, economic activities in China have dwindled, and it's taking a backstage, and that is actually feeding into the demand. The second reason that could be possible is this policy rate hikes. Because what this policy rate hikes do is just to, in a way, stamp demand, just to be able to cap inflationary pressures. But it is early days yet to say whether this policy rates are what is accountable for this. Another way is also thinking about maybe is demand peaking. If also demand peaks, of course, this is what is going to happen. But among these three factors, the potential of demand peaking and potential of this policy rate hikes globally coming to have center stage, coming to have impact on the market. And then China consumption, I think consumption in China hold the market potential to be the one that is responsible for what is happening there.
Dr. Yusuf Sulemana is an oil production specialist. Now to some other stories. The Online Drivers Union of Ghana says ride-hailing drivers cannot keep up with the inconsistency in the prices of fuel. According to Francis Tenge, president of the union, there should be proper regulations to cushion the operations. Speaking to Joy Business, he maintained more investments should be channeled into having more local ride-hailing companies operate to support indigents.
As we speak now, last year, each driver on a weekly and a daily basis, we were using 150 cedis to work for the day. But as at today, as we speak now, it's now 250 to 300 cedis a day. For you to be able to complete 25 trips and make between 300 and 400 Ghana cedis, you need that. So it is affecting our weekly sales, because daily you are supposed to save 30 cedis for your car owner. Then so should you drive and make a revenue of 400 cedis? Fuel alone is 250. Now car owners is 70. should you drive 400 Ghana cedis, Uber will charge you 80 cedis, whilst Bolt will take you 100 Ghana cedis. So should I use Bolt? If Bolt should take me 100, to charge me 100 cedis, so 100 cedis plus my car owner's 70 is 170, plus my fuel 250. That is 420 Ghana cedis. I've made sales of 400. I'm rather going to take expenses of 420. The 26, where does it affect me, the car owner? So at the end of the day, drivers are losing their cars because of the fuel crisis.
So because of the fuel crisis, now let's look at car rentals. We know that is also a business people are really doing in the country. They are renting cars, but you guys are doing work and pay. What's the connection, and how is that also affecting your operations?
Yes, the car rental, they under fleet management. So what happened is that it's a competition now. They also charge very high, you know. Some charge us maybe 400 cedis or 450 a week. So they take it and they give it to the driver to work and then pay them. So that is also another challenge. For us to be okay, it would be much better should people buy cars and then give it to us at affordable price. Yeah, that one, it will be okay. Because the weekly sales is also a factor. The service fee is also a factor, and then the car sales as well. You understand? Plus the fuel, plus the bundle and the data you do. So at the end of the day, the driver is the one who is at a disadvantage now.
Cocoa Board is expected to sign the cocoa syndicated loan agreement this month in Ghana with more than 6 banks. This is what Joy Business News has gathered from persons with knowledge of the agreement. George Wiafe has more details on the story.
We understand that Cocoa Board is targeting up to $1.3 billion in terms of the facility from the banks. This should mean that when the date is formally announced for signing of the facility with all the banks, the amount agreed could be less. This is despite having lead arrangers that have agreed to pre-finance the entire amount targeted by Cocoa Board. It is not clear for now whether it is the price or the LIBOR the Cocoa Board is expected to pay might be pushing them not to take up the entire amount of $1.3 billion that has been approved by Parliament. For now, we can confirm that 6 banks would act as lead arrangers. That includes Standard Chartered Bank, Rabobank of Holland, Ghana International Bank in London, and French Investment Bank in Athens. The rest are Industrial and Commercial Bank of China, and one of Japan's largest bank, that is MUFG. The up to $3 billion is expected to help Cocoa Board finance cocoa purchases for the next crop season. However, the Bank of Ghana would take the dollar cash and give the cedi equivalent to Cocoa Board. These dollars would help the Bank of Ghana stabilize the Ghana cedi going forward. The first tranche of $910 million should come in from next month, with the remaining spread over 3 months.
Moving on, stakeholders in the fight against climate change are calling for the use of digital platforms to enhance sensitization on the globe. This is to reduce risk of being attacked and also make use of social media to propagate sustainable development. Surge Africa and Oil Watch have trained some activists on the use of digital tools in digital activism. Here's a report.
The growing threat on climate change activism has made it necessary to shift away from traditional campaign to a new paradigm of using digital media. The training by Surge Africa and Oil Watch is focusing on stakeholders in environmental and energy transition. Founder of Surge Africa, Nasreen Al-Amin, is confident that digital activism will reduce the risk of attack on various campaigners, especially in Africa.
We can explore numerous ways or resources that can ensure and enhance digital activism. This is to say that moving on from traditional activism, taking it to the streets, traditional activism, taking up against big entities physically, to seeing how we can leverage on social and digital tools like social media, like media platforms, like other social tools available online, to see that voices are being heard beyond the grassroots, to ensure that, activists are not physically endangering themselves, but also try to see that their voices go beyond who are within their midst, but also communities who are represented are heard beyond, say, West Africa, beyond the African continent. And digital activism has the ability to provide activists with that kind of exposure, with resources that they can be able to do that.
Speaking on behalf of Oil Watch, Noble Waja explained the need for collaboration in promoting digital activism.
Informed by the fact that Search Africa philosophy aligns with Oil Watch Africa's philosophy, which is about transiting away from fossil energy development, and it's a process that we think is an antidote to addressing climate change impacts globally.
You're still watching Prime Business with me, Beverly Broohm. Now let's take a look at some other stories. The African Tax Research Network and African Tax Administration Forum have agreed to press on governments to rationalize the tax incentives regime. The move is aimed at helping members raise more domestic revenue to make up for some project losses due to the Continental Free Trade Agreement. Executive Secretary of the Forum, Logan Watt, spoke to Joy Business at the closing ceremony of a three-day Congress in Accra, which focused on the revenue implications of the Continental Free Trade Agreement.
The Congress was to deliberate on the tax and revenue implications of the African Continental Free Trade Agreement. The meeting observed that based on data from 35 members, import duties contributed to 6.41% of total tax revenue in 2020. Out of the 5 main tax types, import duties were at the bottom position, whilst the top 3 were VAT, personal income tax, and corporate income tax. According to Logan Watt, tax incentives send away huge portions of income as the continent loses about 3% of GDP to tax incentives.
Tax incentives signs away huge portions of income. The continental tax incentive losses is more than 3.5% of GDP, of the continent's GDP. And yet we are not doing the cost-benefit analysis of those tax incentives. The proposed global agreement on the taxation of the digital economy is introducing what is called a global minimum tax. That has huge implications for Africa and the likelihood of us giving tax incentives to multinational corporations. Why? Because should this global deal happen, there will be what is called a global minimum tax. That means all companies in the world will have to pay a minimum of 15% tax.
Commissioner General of the Ghana Revenue Authority, Reverend Dr. Amishadai Owusu-Amwa, who was also conference host, called on government representatives to ensure that the ideas and agreements made at the Congress are implemented to the latter.
Been 3 days of very insightful deliberations, and the research papers that were presented were also very thought-provoking. And we, as in Ghana, we are not just taking the top 3 that were selected, but all the others and trying to see what we can do out of it. And as I said at the closing remarks, it's important that these things doesn't become just paperwork and research work, but to translate into policies and procedures, which eventually results in the improvement on the tax collection as far as Ghana is concerned, and also for Africa as a whole for that matter.
32 African countries were represented by over 230 participants from ministries of finance, tax administrators, the AFTA Secretariat, and other civil society organizations, among others.
The Ghana Investment Promotion Center, GIPC, has been on a sensitization tour in Kumasi with the goal of compiling domestic data for investment projects. Small and medium-scale enterprises in the Ashanti region were sensitized on the untapped economic potential and opportunities existing in the Ashanti region. The forum also provided a platform to brainstorm on challenges that inhibit their growth. There's more in this report.
The forum, dubbed Grow in Ghana, Grow with Ghana, is a nationwide initiative by the Ghana Investment Promotion Center. It is to identify and compile domestic data on various investment projects and opportunities in the various regions. These will be presented to the investor community to foster partnerships and financing. Over 400 businesses in Ashanti region were present at the forum to brainstorm and explore investment opportunities. Edward Ashonlate is Director of Investor Services at the Ghana Investment Promotion Center.
The GIPC is there for both wholly Ghanaian-owned businesses as well as companies with foreign participation. During the timber boom, there were a lot of wholly Ghanaian-owned businesses in the timber industry which registered with the GIPC. Some of them are no longer in operation. And if I can just backtrack, during the time of the ERP, Economic Recovery Program, they identified certain businesses in certain sectors, and they were provided with the needed support to help them to sustain or revive and grow their businesses. So if you are not known and there is some level of support coming, definitely you will not be covered.
To enable businesses to diversify and expand, representative of the Ghana Economic Transformation Project, Mrs. Agatha Quayson, encouraged businesses to enroll with the Ghana Investment Promotion Center.
I believe that this important forum is one of the supports that we are providing to GIPC, in addition to others, GSA, RGD, and then the Ministry of Trade. This forum is important because many a times people have perception that GIPC supports only local foreign investments. However, this will show or provide the opportunity for you to see that there are a lot of opportunities in Ghana that local companies can also take advantage of to be able to grow their businesses and expand. So on this note, I believe that with effective collaboration, working together and support from all stakeholders, we'll all work together to grow our businesses and then also improve private investments.
Traditional authorities as well as municipal and district assemblies were also sensitized on the need to make land available for investment purposes. Partnering with the traditional authorities, the Ghana Investment Promotion Center will visit some selected project sites in the region. Mona Lisa Frimpon reporting.
On that note, we end Prime Business here on the Joy News channel. For more news, do log on to myjoyonline.com/business. Thank you so much for your time. I leave you with news making headlines on the international front.